between tariffs and fears of an AI bubble, 2025 has been a volatile year, but pretty good for stock market investors. Let's get more on the price swings we've seen for certain stocks. We're joined by Grant White, portfolio manager and investment advisor at Endeavour Wealth Management. Grant, great to see you. Just start off 2026. What will your strategy be, broadly speaking?
Yeah, well, good to see you as well, Andy. I think that 2026 is going to be an interesting start to the year, to say the least. I mean, 2025 has been a very interesting year, as you point out, lots of volatility. And I think that's going to continue into 2026, where we're probably going to see, some profit taking continue on. I think everybody, we're seeing a little bit of that. And we're obviously right now, especially in the Mag 7. But I think everybody wants to see a good year, a good number to finish out 2025. Now to start out 2026, I wouldn't be surprised at all to see a dip in the markets. And so I think investors need to be very, focused on fundamentals, focused on high quality as you enter into 2026. Diversification, I think, is going to be important if you want to see consistency in your portfolio. And I'm not saying that 2026 can't be a good year. I just think we're going to see a little bit of rockiness up front, and then we'll see where things go from there. Obviously, a lot can happen.
What do you mean by high quality, Grant? I hear portfolio managers say that, but what are you referring to?
Yeah, that's obviously an easy one to toss out. I mean, what it really means is I'm focusing on balance sheets right now, especially focusing on cash flow, just to make sure that we are into, we're holding companies that can sustain storms, can sustain the weather. And I'm not so worried about share price, although I am concerned about valuations. I'm not so concerned about, the type of company. I'm more focused in on the balance sheets and the cash flow at this point, and making sure they're strong. I'm avoiding speculative bets, which we've seen a lot of that this year. And I think there's been a lot of speculation about where things can go, especially in AI going forward. And so I'm focusing quite a bit more on the fundamentals of the company, if you will, going forward into 2026.
You have some stocks that you've been watching that have been volatile this year. Let's start off with Cameco. I believe you reckon this is a buy right now, but we did see some swings. Let's have a look at CCO.
Yeah, so this company has gone through a lot this year. I mean, I think we've seen a downside of 30 to 40% earlier in the year, and a lot of upside, following through as things continued on, as we, went through Liberation Day, as the AI trade continued to pick up steam. Companies like Cameco have also participated in that momentum. And I still really like Cameco because, the story's still there. I think from a valuation perspective, it's fairly priced. I don't know that it's super cheap right now. I don't think so. But I think from a valuation perspective, I think it's fairly priced. And I think there's a lot of tailwinds that can help to lift Cameco going forward. It's certainly on trend. We believe that energy production is going to continue to have to increase in order to meet the needs. Not to that was already the case. AI just went through the roof on that, obviously. And so Cameco, I think, is going to be an important company going forward. And other companies that are around, energy production, I think are going to be really important. So Cameco is very well positioned going forward.
And a name that you're more cautious on, I think you call it a conditional buy or a hold, is Air Canada. What's your broad take on that one?
I always struggle with airlines, Andy. I mean, I think that, Air Canada is a pretty well-run company. I think, they're managed quite well. They've weathered some big storms as well this year. I mean, they've had, labor outages. They've had, strikes, et cetera, going on this year. And so all of that, there was a lot of headwinds. On top of that, I mean, there's been obviously a challenging environment. Travel to the U.S. is down, and so on and so forth. So for all those reasons, I think Air Canada has actually weathered the storms pretty well. I think they're down about 16% or so in the year, 25% over the 1 year mark, as you're pointing out on the charts there. So it's not that it hasn't been without its bumps. We saw big declines and then a nice rebound, and then kind of settling out at this point. So I struggle with this one a little bit just because I don't like the environment per se right now, but I think that they are really well-run company. And so from a pricing perspective, I think they're all right. You just have to like the story going forward. And I'm not a huge fan of airlines as an investment overall.
Tesla is not a stock that you'd be putting new money into right now.
No, I mean, Tesla, it's difficult because, we talk about speculation. I mean, the reason you would buy Tesla today is because you're speculating and you believe that they can accomplish, the robo-taxis, autonomy in scale, not just in one center or a few centers. They have to do this on mass scale. You believe the story about Optimus and the robots and what they're going to be able to build and be able to produce 1 million robots here. If you believe those stories, then Tesla, I think, is underpriced today. It's probably worth 3, 4, 5 times what they're trading at today. Now, that being said, there's a lot of things that can get in the way of that, and there's a lot of competition that's already out there. I was chatting with a friend of mine who lives in Europe a couple weeks ago. I was chatting with them, and nobody's buying Teslas in Europe. They're buying BYD. They're buying like Chinese-made cars, and so I think there's a lot of challenges that Tesla is facing. I would say we're holding on to it. I'm a personal shareholder. I have been for a long time. I'm holding on to it. We're not adding to it, but it's an interesting company. It always is, and I think there's a lot to like about it. I just don't like the valuation. If you ever get a price opportunity on Tesla, though, I think it would be good. It's a good one to buy.
We've seen some price swings in Micron Technology. At one point, it was down 75% amid fears of a chip glut.
What a tale of a year of two tales, I guess. It's obviously faced mega struggles in the beginning of part of the year, and then has absolutely been lit on fire since about April, early on in April, and to date right now. So Micron is a company that we really like still. I mean, if you like the AI story, which I don't know how you don't like it going forward, I think there's going to be some bumps along the way, which we're kind of encountering now. But Micron produces memory chips, which is a really key component in the entire AI story. And frankly, in all of this new technology that we're building, I mean, they were important before, and I think they're that much more important going forward. This is a real pickaxe and shovel type of investment in the AI trade. And so if you think that AI is going to continue to expand, Micron should do very well. From a valuation perspective, I think they're pretty fairly priced as well right now. It's not that they're cheap, but I think there's a lot of runway ahead of them. And so I think you can like this company going forward. And certainly, again, it's been a year of two tales with it. I mean, so it's been an incredible lift since about early April on there. And I expect that will continue in for years to come.
We better leave it there. Grant, thank you very much indeed.
Thanks, Andy. Always a pleasure.
Grant White, Portfolio Manager and Investment Advisor at Endeavour Wealth Management.